Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast. And I want to start out by reminding you that there is lots more to this content that I provide on wealthformula.com. So go ahead and check that out, including a copy of my book, 7 Secrets of Eternal Wealth, which you can also get by simply texting 44222 and typing Wealth Formula, one word. And that's, simple. And you can get that. And that's what technology does for you, by the way. Anyway, I also want to remind you that if you enjoy what you're listening to, that there's a course, a forum, a private Facebook page, and bi-weekly mastermind calls. And you can be part of that group. You can be part of Wealth Formula Network and get this phenomenal course featuring the likes of Ken McElroy, Tom Wheelwright, Kevin Day, Dean Graziosi, me, and a bunch of others, Christian Allen. And you can get that all by simply going to wealthformularoadmap.com and checking that out. I highly encourage you to do so. By the way, these mastermind calls are awesome. We've had special guests now. We've had, we had Kevin Day once, and we had Christian Allen once. It's just going to get better and better. So definitely check that out. Now, as for today's show, I want to go back a little bit. I feel like we need to go back a few steps because we stopped doing this weekly wealth widget a while back, and maybe people should go back and read some of those to catch up. I had a few conversations earlier this week, last week, I don't remember when now, with some investors that made me think, gosh, I got to talk about this stuff a little bit. And it got me thinking about, what some of these basics I believe in that I should at least tell you what I believe in are. First of all, let's start with why I generally prefer to own an asset, okay, whether an entirety or a fraction of an asset, as opposed to simply holding a note. In other words, lending money for somebody to do stuff at a fixed return on investment, otherwise known as a note or a promissory note, right? It's basically, what is a promissory note? It's basically a promise to pay the lender a certain amount of interest over a period of time with return of capital, sort of like a bond, right? So let's say you loan someone flipping houses some money, and they issued you a promissory note at 8%, right? That means that the borrower is then going to take that money that you lend them, and they can go and make whatever money they want with that property, and all they got to do is pay you 8%. Regardless of how well that property does, your maximum return is 8% at best, and you're going to pay taxes on that, okay? Now, I also would like to emphasize the word best, at best, 8% at best. And I say that here because understand that a promissory note, while legally binding, does not guarantee that you will make 8%. Your promissory note is nothing more than a lien, okay? Hopefully it's a first position lien, hopefully. And hopefully the asset's value will cover the amount of debt you as the issuer lent in the first place if the borrower defaults. After all, if you lend somebody $100,000 and they default, you better hope that the asset is worth at least $100,000 so you can, sell it off and recover your initial capital if you're in a first position. Now, is that a guarantee that you're going to recover that money? For anyone who thinks it's a guarantee, I refer you to all of the notes that were defaulted on in 2008. A lot of broken promises, right? A lot of promissory notes. If you think that all those people who made loans got their capital back, you are sorely mistaken. You're smoking something. There is no such thing as a guaranteed return. Even the Securities and Exchange Commission will tell you that. Just Google it. The only asset that is considered guaranteed in the eyes of the SEC is U.S. Treasuries. And that's another story entirely, if those are even guaranteed. So if you are not guaranteed money and your upside is limited and you've got to pay taxes, and if there's a default, you got to go through all this pain, why invest in debt in the form of promissory notes rather than equity in any project? Well, I can tell you that I personally will always invest in equity over debt. Why? Because you have more upside, you hedge inflation, and you get tax advantages, right? Notes have none of these qualities, nor are they guaranteed. Now, I'm not against investing in notes. In fact, some of you may know I'm very interested potentially in looking at the model that George Newberry's been doing, and with non-performing notes. I'm trying to study that. And I'm doing that because there's an opportunity there to make very high returns, right? And I've invested in George's fund. But just to be clear, I've not done this blindly by any means. I've done it with people I trust. And I also know for a fact that it's really not safer than investing for equity. It's not. I'm sorry, it's not. Anyway, hopefully that makes sense. I don't do the weekly wealth widget anymore, as I said, but I need to make sure I clarify things so that people, hopefully can learn some things along the way. Listen, we all want cash flow, but be smart about your investments and look at them holistically. And for heaven's sake, if someone uses the word guaranteed in their offering, short of being the United States government, run the other way. Okay, they may not even be nefarious, but it's clear to me in that situation, they don't know what they're doing. Okay, you cannot guarantee somebody a return. Anyway, my guest on Wealth Formula podcast today will attest to everything I've said. And why should you take his word for it? Well, take his word for it. He is the cash flow ninja. So when we come back, MC Lobster. Welcome back to the show, everyone. Today, my guest is familiar to you if you've been listening to the show for a while. His name is MC Lobster. He's a wealth strategist, educator, and a financial freedom fighter. He's also the founder and president of Producers Wealth, and probably, I'm guessing you may know him best for his podcast. He is the Cash Flow Ninja. And his mission is to help as many people as possible to eliminate the control of banks and financial institutions. Sounds familiar, right? And have their lives, take their lives back basically from Wall Street. He believes the best way to achieve this in the information age is by reclaiming the banking function in your own financial life through structuring and efficient cash flow management systems and creating and building assets that provide multiple streams of income. Without further ado, welcome back to the show, MC Lobster.
Thank you so much for having me on. Honored to be back on.
So it's been a while. What have you been up to, man? What's the latest from the ninja there?
Yeah, it's been quite an exciting year. So many things going on the Cash Flow Ninja front. We're growing. We've had over 350 episodes now, so we're quite
nuts.
Grown in footprint globally. I think it was over 170 countries at one stage that we've reached. So we've grown our footprint internationally. So that's been very exciting. On the Producers Wealth front, we're also growing. We have the ability to service clients virtually in all 50 states. So we've checked 39 of those states. So we're growing in footprint there. And that really pleases me because our mission was to provide and service and education to as many people as possible. And it's going really, really well doing that. And then on the personal front, I had a son that was being born since the last time we spoke. Yeah. So yeah, and then we are expecting our second due in December. So
wow.
Can't complain. A lot of things on my plate, my friend.
Yeah, you got a rugby team going there, right?
Yeah, that's right. So a lot of stuff to be grateful for, and a lot of stuff to be excited about.
Yeah, good for you, man. I gotta just ask you, you do 3 shows a week, and that to me is mind blowing because, I do this One Wealth Formula podcast, and as we talked about, I have another podcast that's going to be coming up, but it's a lot of work. I mean, how do you do 3 podcasts? How do you find 3 quality guests and have this business on top of that?
Yeah, I think one of the things that I firmly believe in from an athletic background is systems, right? Systems, processes, and procedures. And I can kind of combine that with the philosophy that I've picked up from actually from Grant Cardone, where you don't manage your time, you control it. So you put these systems and processes in place and then control your time. And then, once you have things systematized and scheduled out and you're controlling it, you'll be able to do that. And you bring in the right people to help you, right? The right team members, the right people. And also, I love to time block. I like to do things when I'm in flow. So with podcasts, when I put my, my ninja outfit on and get my purple background behind me, I'm ready to go. And then when we focus on the other stuff, as far as strategy wise, helping our clients, we do that too. But yeah, it's been a lot of fun, but we keep busy.
Yeah, I was going to comment that I am so impressed with your background. If anybody's watching this on video, and you've got a Cashflow Ninja t-shirt and a Cashflow Ninja hat. I mean, I can't tell you. I'm just like green with envy right now. I've just got pictures of my kids back there somewhere. But listen, this is great to have you on. Obviously, one of the advantages of having a podcast that you are so prolific on is talking to a lot of people and learning a lot of different strategies. I'm curious, in the last year or two, let's just take the last year, for example. Tell me a couple of examples of things that you learned that you had no idea existed.
There's been quite a number of them. One of the central theme, if we just look at the approach of a lot of the people that I've interviewed. So I've interviewed over 350 people, I think, right now, and we've got more in the hopper. But one of the big takeaways for me too, and this is all with a mindset of where we are currently, right, in the world, market cycles, all that kind of stuff, is the amount and the emphasis that they place on relationships, the emphasis that they place on developing themselves, and then obviously their network, and then what is important to them: concepts, ideas, creativity, philosophy, core beliefs, principles, and values, right? So as opposed to things, because I think a lot of these, and I like to refer to them as cash flow ninjas, right, that I get to learn from, because a lot of these people know that, and we've seen this with billionaires too, right? When they lose everything, and you almost feel sorry for them, and then within the nick of time, they're back. They're flourishing, they're successful again, and they've started up another business. And the reason why, in my opinion, that it happens is because of that emphasis on the building those relationships, the network, and all of the intangibles that they place importance on, right? And of course, the self-development, because if you're building your relationships and your network, those folks truly believe that they have to provide and produce and create value for those relationships and that network. So that's the intangible stuff. Some of the other stuff that I've learned, I mean, I've seen pretty interesting stuff within the real estate space. And of course, tying kind of into that is the crypto and blockchain, which you talk about quite a bit, and have had guests on of how that will affect the real estate space, right? That's some of the stuff that I had no idea of how to look at it. How would it affect, for instance, tokenization? How would tokenization disrupt the real estate space? How would it disrupt all the other industries potentially? And blockchain technology. And I think of all the things that I've seen, and I've seen cash flow ninjas within niches now, especially, within the real estate, we see mobile home parks and self-storage being pretty popular. 5-6 years ago when I started looking at this, and somebody said, "What are you looking at?" And I said, "Mobile home parks." They go, "Trailer parks?" seriously, trailer parks?
Yeah.
And now, of course, it's everybody's on board with that, especially with the recession. And then, we look at the businesses, the online businesses, e-commerce. This is one thing that's blowing me away. If you the opportunity to start an e-commerce business or have someone in your family start an e-commerce, because if you think about it, we haven't even scratched the surface when it comes to e-commerce. More than 90%, around about 90% of things are still being sold in brick and mortar stores. So we're around 10% or less that's online. And a lot of people think that they've already missed the boat. This is a massive opportunity. I think it's just going to grow. And this is a huge opportunity for folks to create an additional stream of income. So that shocked me and surprised me. And then, I think a lot of these things are, again, back to the philosophy, vehicles, and there's opportunities in every single niche, but these are some of the things that just stand out to me and whack me in the face and say, wow, unbelievable.
Yeah, I would just make a couple comments there on why the billionaires come back as billionaires. I am convinced, and this is where I start, it becomes, wealth formula, the numbers meets Buck Joffrey of the metaphysical world. And this is something that I really believe, that there is each one of us, there's a little bit of a wealth thermostat, right? And we will generally, if we're not cognizant of it and try to change the thermostat, we will generally regress back to the mean. So if in your world, you're used to being somebody who makes $200,000 a year, that's probably what you're going to keep doing unless you can change that thermostat.
Right.
And it takes a little bit of work. Even I'm finding this, and I'm being very conscious about it. I've done, pretty well. And, so me, making a certain amount of money at this point, which I think most people would consider a lot of money. To me, I'm looking at my neighbors, because I live in Montecito, and saying, wow, that guy's worth about $200 million. I don't have $200 million.
Right.
So a lot of money is taking different meanings. And so the thermostat is important. You gotta keep that in your head, because the power of what we believe of ourselves is strong. I will say the other thing, and this of course is going off into a tangent that you probably had no intention of really going into, but I think it's interesting. Tell me more about the e-commerce thing, because the funny thing is, this is something that I've talked about on the show, is that, of course, cash flow is great. And the problem with real estate or anything else is that we get, it's a slow burn, right? Sometimes it's hard. I mean, we certainly have, infinite return models that we like to use to try to increase the velocity of our money in my accredited investor group. But one of the beauties of businesses is that businesses you don't expect them to do 10%. You expect them to be explosive in terms of the growth. And the beauty of an online business, if you can be successful on it, is that the overhead is pretty low. So if you fail, okay, you have failed, right?
Right.
It's a tremendous way to create a stream of cash flow, right? I mean, have you had any personal experience with that? I'm actually thinking about starting something with my 9-year-old daughter. That's what I'm asking.
Yeah, no, this is on the menu for myself and my wife to really dive into next year. So we've got a couple of goals that we're hitting, but I have to tell you, and I've interviewed Ezra Firestone, which is regarded as one of the top e-commerce experts globally on my show. And, the stuff that's available to you right now and the ease of getting into it. And again, this is one of those things where, just like a lot of other things, podcasting is one of them. A lot of folks can get into it, but it's the consistency, it's the education, it's the continual growth that will drive you and separate you from the pack. Because you can get into e-commerce, but to be successful, that's another kind of level, and that's where education and that kind of stuff comes in. But I see it as an enormous opportunity. Enormous. Because if you think about it, in the old days, just think of the daunting task of starting an Amazon business. You're like, how do I start this? Where do I find the stuff? Who do I call? Someone in China? It's all basically streamlined. And there's been some trailblazers that went down that path first,
Yeah.
that kind of open it up. So I see enormous opportunity there. I think it's a missed opportunity too, if you don't, because it's just going to be an area where there's significant growth. You and I have spoken about, cryptos too, it's a trend, right? You see certain trends evolve and you can see it kind of take off, the network kind of growing around it. E-commerce is exactly the same. I think it's a very strong trend, just as crypto. And online education is another one of them too, because the school system, in generally is so broken as far as learning skill sets. It's very limited to some of the skill sets that you can learn, that these three are just three trends that I've identified that are just massive opportunities.
Yeah, the challenge I found with identifying e-commerce opportunities is that, if you look at the internet courses on that kind of thing, a lot of them are, listen, you're basically creating revenue for somebody else's online business, which is to market and sell you a course. And that course may or may not have any value at all. So that's certainly one of the challenges. It's actually something we talk a little bit in my private Wealth Formula Network group. We call it side hustles, and we're just trying to discover some of these. Let's switch a little bit gears, because obviously you've got the producer's wealth, which is ultimately a financial firm, and you help people structure and create wealth creation systems. If I came to you and I said, "Hey, MC, I make right now $100,000 a year. I don't have a lot in the savings, but guess what? I just inherited $5 million. Where do you start?"
Yeah, I think the three reasons why a lot of folks fail when it comes to money and when they start is, the first thing, a lot of folks invest in themselves, right? They do the education, they read the books, they take the courses, they go to all of these very high ticket items, and so forth. And then they get stuck. Then they go, well, I've read all of Robert Kiyosaki's books. Now what? Right? What do I do now? And the first thing is that it ties into strategy, because it's a completely different mindset shift to products, vehicles. Because in a lot of those educational stuff that's out there too, it's very specific. Become a real estate investor, so I'm going to invest in real estate. Become, we used e-commerce, how to set up an e-commerce store, right? So these are all just this vehicles, but it's the whole thing that we're looking into, that we will look at, is the strategy. What strategy suits you? Every person is different. Every person has different strengths. We look at your mental capital, your relationship capital, because that will contribute to your financial capital eventually, right? Those combined. So from a strategic standpoint, the second part of that is to have a power team that helps you implement a strategy, having the right people in place. This, as you know, takes a while. So that's one thing that we bring. I mean, trust me, it's taken me 2 decades to do it. I've kissed a lot of frogs. I've had a lot of those. So I understand that comes into play, right? Asset protection guys, estate planning guys, folks that are going to do it at a high level, because just as, not all CPAs are the same. Not all estate planning guys are the same. If you want to do it at a high level, especially if you just inherited a ton of money, using your example. And then the third leg of it is accountability, because a lot of people get all excited. There's a lot of woo-woo. Trust me, I love woo-woo, but woo-woo only gets you so far. Taking action in the step with a strategy and a power team, now you're going to be held accountable to do the certain things. So once we break that down, we look at we look at the person, as I mentioned. We look at what they're trying to accomplish with it, right? And then we look at the systems that we bring in to create. So for instance, if somebody inherits a large sum of money, and we have we actually have, now it's a great question, because we have a couple of clients right now. They are in the exact same boat right now. They have that scenario. So we look at the systems that we can bring on, and we keep it very simple. As you mentioned, production is the first system. You have to be able to increase production and creation. And then, the 3 steps: you have to make money, you have to protect money, and you have to multiply it. With the protection of money comes the liquidity system, and the multiplications, a part of it is the income system. So from a liquidity standpoint, we look at how we can efficiently position that money in savings right there, and then how we can efficiently create income from those. So you and I have spoken about this before, and I've mentioned this on your show. So we use cash flow banking, wealth formula banking to do that. That's where we park the majority of our money right there, because of all of the advantages, the guarantees that it has of the principal, and then also the growth, the dividends that it has, the tax favorable treatment that it has, the privacy, the asset protection. I mean, and we can go on and on and on. And it does play into the dollar maximization kind of element to it too, where the same dollar is doing many different functions. Then we take that, and for instance, we would look at some of the investments that we could put it in, right? So we could, for instance, put it into certain cash flowing producing assets, depending on what their goals are. Immediate cash flow, if there's an income goal, we could look at certain syndications. If it's more long-term growth, we could look at other vehicles such as live settlements, which I've known you've covered on it as well. And it's all dependent on that person's strength too. Let's just say that person was making 100,000, using your example, inherited a lot of money. Maybe their passion is in, maybe their passion is in real estate, and that's what we would look at to help them with. But the first thing is they have a windfall. We want to protect that windfall. We want to position that windfall as efficiently as possible. And then we want to create efficient income from that windfall, meaning using the Robert Kiyosaki cash flow quadrant on the right-hand side as an I, because the B and the I is more tax efficient and more efficient as opposed to the E and the S. So, and holistic, I love when you talk about a holistic approach, because we've taken an overview of the person. We've identified inefficiencies. Maybe there's other habits or other things that they're doing that are very, very inefficient. That's going to provide some challenges along the line for this money that they just inherited, right? So we have to look at the efficiencies. We have to look at it all as a whole, but that's kind of what we do. To give you a quick example of that person, for instance, wanted to, let's just say, for instance, they inherited around $5 million or so, right? Well, or 4.5, let's be more specific in an example, and they wanted to generate passive income. Well, you could generate $360,000 of passive income a year at an 8% consistent return off that money. Now, you don't have to put it into wealth formula banking or cash flow banking. You don't have to put it in there, but if you put it into there, we've run some scenarios, there's a significant opportunity cost because of the inefficiencies. So you have to be efficient in all areas. So that's how we would help them and position that.
Yeah, I think the takeaway from what I'm getting, and I agree with it, is I think having something like a wealth formula banking or that kind of thing is a centerpiece from which to sort of quarterback your investments is a good idea. Is certainly a sound strategy. One of the challenges, though, is that if you have a big lump of cash, of course, you can't dump that first year into a policy.
Yep.
It's difficult. You're going to have to probably layer that over several years. What did you tell the person who with the $4.5 million about that?
Yeah. So for instance, over those years, we look at what they need and what they're currently doing, and look at ways to improve it. So using that example, about $100,000, they're living comfortably already, right? So this is something that's going to be outside of it. And to your point, this is the foundational asset. This is the centerpiece. This is, what folks also refer to as the Rockefeller Method, kind of the centerpiece of their entire trust. So we're going to put that money in there. There's ways. I mean, that's very, very tactical. You can stagger it through certain other products that you bring in. There's many different ways of how you could do that efficiently, and you review all of those different options. But I would say the first thing is we have to protect that. Yeah. And sometimes when people get into a lot of money, you have to protect them from themselves.
Yeah. I have Wealth Thermostat again, right? I mean, if you're making $100,000 a year and all of a sudden you got all of a sudden you've got 4.5, 5 million bucks sitting there. The regression to the mean, your brain's gonna try to get you back to $100,000 per year pretty quickly if you're not careful. So that's where you have to be really careful. I think the interesting thing that happens at in the higher levels that and I certainly see this with a number of people in our investor group is I think a big part of what you're talking about, which I think is important, is the majority of your capital at some point ends up, you really have to start looking at wealth preservation rather than pure alpha, right? I mean, if you're I think if you're young and you don't have a lot of money, I mean, you're going to do things. I would recommend you do different things than if you're 50 years old and, you never made a bunch of money and you're not an entrepreneur or a sophisticated investor and all of a sudden you came into 5 million bucks. Totally different situation. And, but it is an interesting one. Tell me about some of the, non-banking strategies that you've come to like. I mean, you talked about, 8% growth and things like that. I think the challenge, again, and the devil's in the details. I feel like one of the reasons, for the most part, that I've stopped, having many people on my show who raise capital is that unless I have personally invested with that person, it's going to be a tricky thing because there's just, I had a guy, and you'll love this, MC. We had a recent opportunity, which with a group in the investor group that that I think is an incredible performing group and just tremendous track record. And one of our guys pulled out because he said that he was looking for something with a guarantee. Mm-hmm. Well, there's no such thing as a guarantee. He said, well, I have a promissory note from another group, and it says I'm guaranteed. So it's legal. It's a binding document. Right?
Right.
So I mean, I get it. I mean, I understand why that can be alluring and that can be something that people believe. But first of all, it's pretty much, if anybody's calling it a guarantee, it's pretty much, it's illegal. The SEC will not allow you to call something a guarantee. Second of all, there's no such thing as a guarantee because at best you have a lien and you don't know you have a first lien. You don't know if you have a first position lien. You don't have a second position lien. What do you have? So when you're competing with a lot of BS out there, when people, and I shouldn't use the word competing, but when you're wading through the BS, right? I'll give you a better visual of what I think the vast majority of offerings are.
Yep.
I mean, how do you direct people through that?
Yeah, I couldn't agree with you more. You make such an important point, especially right now. The tides are high. Everybody's swimming. It looks like it's a lot of fun, right? And as Warren Buffett talks about, you find out who is swimming naked when the tide goes out.
Yeah,
right now, it's very sexy or very, everybody's getting into syndications and running around and have websites up. And I actually had an expert on my show. This is all he does is he vets businesses and people, and he has an entire business based out of it because there's so much nonsense online and there's so many people raising capital right now. So you make a great point that we have to continually go through all of this nonsense that's out there and misinformation and so forth. So how we direct people is we have partners. I'm a very big believer in relationships, the same as you, people that we've personally invested with and do business with that have a track record that's been in this one, that have seen the last downturn, that came out of that, that went through that. So we also have a group that we share certain things with and our clients. Sometimes not doing anything is also the right thing to do, right? As Warren Buffett said, that's also doing something. You're building a cash position. So now, especially for folks that are starting out, now is as better as ever to build a nice cash position and not do anything. So we only look at the opportunities that are available through as I mentioned, our relationships. And many of our folks, they haven't had one in a while. Quite a bit because they're very diligent. They do their due diligence. So I would just say to folks, do your due diligence, especially online, because right now the tide is high. There's a lot of misinformation on there. There's a lot of folks coming into the space. It's very easy to start a podcast. It's very easy to start a YouTube channel. It's very easy to get a website up and running. Do your homework.
Yeah, look at us, right, MC?
Yeah, exactly. Look at me. It's very easy. So I mean, I would just have people caution. It would just have people caution and make sure that they do their due diligence and just be cautious, because it seems a little frothy from where I'm sitting and looking at it.
And I couldn't agree more with that. And again, I've got people contacting me to be on the show all the time who want to raise capital, and it's like the last thing on earth. They're offering me money to do it. I won't do it. I mean, and what you're finding too, and it's just, to me, it's just a scary thing, is you've got a lot of, people who've got full-time jobs who are the quote unquote asset manager of literally $20-30 million assets, and they're not doing much with them. They're kind of just riding a wave. And as we discussed before, all it's going to take is a little bit of cap rate compression and one or two violations of a loan covenant, and there's going to be some buildings that go on discount pretty quickly for buyers who are being aware of that. One of the things that you mentioned, I think, is useful too. You and I are both a big fan of this, wealth formula banking concept, what we call wealth formula banking, and it's a great time to build that cash position, particularly with a vehicle like that, because you could be in cash, but you're going to make less than 1% on your money. Whereas, I mean, really, with wealth formula banking, you're talking about 5.5% that's compounding. And that's certainly much more favorable. And that, as far as guarantees go, well, I mean, that's about as close as you're going to get outside of a U.S. Treasury for real guaranteed money. So, I mean, I think if for those of you out there who are telling me that you've got guaranteed money coming in, this might be something that you might want to look at in particular.
Yeah, and especially you make a great point by putting money into something that's efficient. And then also, I think this is one of the things that I'm looking at in the next downturn. If there's a sharp correction or just a recession, I think from a risk management standpoint, you have political risk, you have economic risk, you have market risk. But the other risk that folks do not talk about is institutional risk. And it's going to be very important, not just what your money's in, but who it's with. And that's why, again, those mutual insurance companies, just in my opinion, just with their track record and looking at their balance sheets and the excess cash reserves, is a great place to put it on. Another thing that I also would encourage folks to look at, and this is a lesson I've learned just from having a little bit of an insight to some family office setups with relationships in there, is it amazes me the amount of time and of an overall, just from a time standpoint, of how these families and their teams, what they're focusing on is not just the 5 to 10 or 20% of their money that's invested, generating income or business through businesses and investments, but the entire other picture of being efficient in all different areas, plugging cash flow leaks. For instance, from their standpoint and their philosophy is, and you see this through a lot of comments from other family offices. I think it was David Rockefeller Sr. that recently said, our focus has been wealth preservation more actually than expansion.
Sure.
And one of the things that they're doing is they're looking at for inefficiencies and cash flow leaks as far as, let's just take taxes for an example. These families, and they, some of the single family offices around $250 million net worth and up, they know that if they reduce, and it's a changing tax environment right now, if they can reduce their tax liability by 20%, this is why they have CPAs and people working on it, there's no return out in the marketplace, over the course of 20 to 30 to 40 years. And I'm not even talking about transferring it on to the next generation and the next generation after that. There's just no return out there. People can run the numbers all they want that they would have to get, going out in investment. So they know taxes is a massive wealth destroyer. They're super efficient when it comes to that, where they position their savings. We've touched on where's a good place for that, how they position their assets, their income, other cash flow leaks. Inflation is a big one. How are they positioned for inflation? And then all the other inefficiencies that they might find in there. So they audit it regularly. They look at different ways. They strategize. They try to be as efficiently as possible from an estate planning, from an asset protection standpoint, and then also from a tax standpoint. They know already that's going to be the biggest return that they're going to get at any place. So I would say this is a great lesson that your listeners can take with them and say, now's a great time not to chase just returns out in the marketplace, but figure out, hey, how efficient am I in all these different other areas in my life, especially with regards to my personal economy, my business economy. I'll give you an example of a business economy. I just did this a couple of months ago. Just looking at the memberships and the subscriptions that you have for software and all these things, there's so many overlaps. And I mean, there's already a couple of $100, maybe $1,000 in my case, per month that was going out, that there was things overlapping, right? It could be done more efficiently. So there's just a quick example, but figure out how to be efficiently as possible, warehouse some cash to capitalize on opportunities, and don't keep on chasing all of this and chasing returns out there.
Yeah, it's interesting you say that. I just hired a new in-house accountant, and she is super sharp, and from a business standpoint, I think she eliminated something like $150,000 of insurance that was just fat.
Yep.
That I didn't realize. And she did that. And then on my personal stuff, she eliminated something like another $20,000 of personal insurance that I didn't need, that it was overlapped. But I was with a company that, I don't claim to know a lot about liability insurance. So, what you're not educated on is usually where you're going to get burned. And so I just assumed the people that I had for those things were doing the best for me, not just for themselves, but anyway, those are just examples of the types of things that you can do.
Yep.
What other, you talk a little bit about family offices, and one thing that they're always concerned about, especially with these multi-generational offices, is, the transfer of wealth. And what are some of the things that you've learned about wealth, the transfer of wealth? And, presumably you're talking about, people who've got big estate planning problems and stuff like that. What kinds of things have you learned about that there?
Yeah, one of the biggest things that I've seen is it's not only the transfer of the assets and the liquidity, right? That's the easy part out of all of this. When you think of the money that's being transferred every generation, and then looking at the generations that are recipients of this, they're not only good steward of the capital, but they grow it every single year. And I was fortunate enough, growing up in South Africa, I went to a very prestigious school and university, and I saw some of these families, and I can see where they're now, the guys that went to school with me. And they not only just took the capital and turned into trust fund babies, they are growing it. They're hungry. They're very, very, very driven because they're mission driven and vision driven. So the transfer is not only just the assets, which technically it's just done through proper estate planning, asset protection, and trusts and so forth. That's kind of the mechanical side. But the most important part, and this is a part that I really, really like, and I'm diving deep into this and studying this, is the intellectual capital and the knowledge that's transferred to the next generation. And what I mean by that is I have a mentor that talks about this quite a bit and refers to it as a statement of purpose, which is the family constitution that are set up. Right. So it worked for the United States, kind of principles and values of the country and kind of the vision. A family should have it too. And just think about us as individuals, you know, personal growth and development. Yeah, we have that for ourselves, a vision and a mission for ourselves. And for our businesses, we should have it as a family as well. They have that. They know what the family's mission is, what the vision of the family is, and then also the philosophy, the core beliefs, and then the principles and values of the family. And then there's rules put in on this document, basically of what it means to be a part of this family. What do we stand for? What is unacceptable behavior? What are things that we covet and value? What are things that we try to stay away from and steer them in that directions, right? You could talk about health. You could talk about relationships, the importance of it. You could talk about certain things with regards to wealth creation. You know, we've just discussed a lot of holistic things. That's something that could be in that document. That's one way. But living and breathing that as well and sharing that with the children in the family, right, is another thing. And a very big part that plays into that is the family retreat, which there's a book, The Five Men from Frankfurt, based on the Rothschilds. And these guys talked about a family retreat where all the different brothers, because they were all in different cities, right? One in London, one in Paris, one in Frankfurt, and so forth. They would all get together and share best practices, talk about the family. Are we aligned with the document for our family? Are we living our family's purpose and what we're supposed to do? You know, and enjoy each other's company. Share these things within your family. And again, you don't have to be a Rothschild to do this, right? You could do this with your family now. You could take a retreat somewhere and talk about these things with your spouse. It aligns and brings spouses on the same page, right? If that's something that you're wriggling and struggling with, not a relationship expert and not claiming to be one or give advice, but it's nice to have the family and everybody on the same page and have everybody's input in that. So we've mentioned the Constitution, we've mentioned the retreat, because it's all about these soulful experiences too, and relationship. The other part that I also mentioned is the third part, which is the family office kind of part, which one of my mentors talks about quite a bit. And that's just basically the power team of advisors. You know, have a document in there too, guiding advisors. What type of advisors should you have? What's the core philosophy of the family when it comes to wealth creation, right? So for instance, it doesn't have on there that you should max out your 401k on those documents, because that's not part of how they operate. So I think having all of those things in place and living and breathing it, living it today, your legacy, sharing these experiences with your children and with other members in your family is what it's all about. And I think that's going to make it easier, because that's one thing that I've just seen. The mentorship part of it is also huge, and it's a huge opportunity, I think, for all of your listeners listening to incorporate this within their own families. Start doing a couple of things, because the statistics are frightening. The statistics are a lot of folks, even with proper transfer, you know, mechanically, and
2 generations, right? That's
it's crazy. We've heard the 3 generations, and some of the folks that just inherit a sum of money, back to our previous example, that's 18 months is that average of just standard average normal family, where they get a bunch of money and all the money is gone with spent on Lambos, you know, with speedboats.
Just kidding.
Yeah, exactly.
Starting like a crypto show or something.
Exactly. Taking a lot of Instagram selfies.
That's right. Well, this has been great. You know, and by the way, if anybody else out there has had success with an online business, because I'll tell you personally, MC, one of the things that I think is really important for raising children with money, in my opinion, I don't know if it's going to work or not, because my kids are little, they're 9, 5, and 3, but I think that a lot of it is the culture that you have within the house. And so, you know, like right now, you know, I'm starting to teach my 9-year-old a little bit about investing, and she's super excited because we decided we're going to start a business together, and we're hunting around for businesses, and we're trying to do something online. So I bring that up to ask anybody in the audience who has had some success with some sort of easy, sort of in the box online business. Doesn't have to make a bunch of money. It's just, if she can make $10 a week, she'd be happy. Let me know. With that, I will turn it to you, MC. Now, where can we learn more about you? Obviously, we've got the show. We got Cashflow Ninja. What else can you share with us?
Yeah, there's a video course and a webinar that your listeners can check out if they're interested in some of these things that I talk about at yourownbankingsystem.com. It's yourownbankingsystem.com. So there's a webinar, and then I broke it down into a lot of easily digestible sizes, a little bit shorter videos, just talking about these concepts and different things a little bit more in detail. And as you mentioned, Producers Wealth is my company. They can check it out at producerswealth.com. And then the show is cashflowninja.com.
Fantastic. Well, thanks again for being on the show, MC.
Thank you so much. As always, enjoyed, Buck.
We'll be right back. Welcome back to the show, everyone. I hope you enjoyed the show. MC is a really good guy, and he and I obviously share some perspective. Now, during that podcast, we referenced something that he and I both have an interest in, which we call Wealth Formula Banking. If you're interested in learning more about that strategy, which is, I think, a good thing to do, whether you do it or not, learn about it because it's incredibly powerful. Visit wealthformulabanking.com. And for many of you and myself, you can look at something like this potentially as a candidate with a focal point to your portfolio. And I think that's kind of what MC was getting at as well. So check that out again. It's wealthformulabanking.com. Finally, I want to announce that next week will be the debut of my new cryptocurrency podcast. And I want to thank all of those who, based on my request, sent me a bunch of suggested names, and I liked a lot of them. Some of them I couldn't do, some of them were taken, etc. But anyway, I've got a good name for it, and it's going to be cool. I think you're going to like it. So next week will mark episode number 1 of, drumroll, Cryptonomics Radio. Hopefully you like that name. I think it's kind of cool, Cryptonomics Radio. It'll be at cryptonomicsradio.com, etc. I don't think it'll be out on Sunday. I think we may do it sort of a midweek launch, but I will definitely let you know. But that's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.